Yo, what is going on, guys? Welcome back to another video, and today we are going to be going over my full trading plan, what I do on a daily basis. And yes, I do understand I have made this video in the past before. The last time I made this video, though, it was a month and a half into my trading process. I am now about 5 months in, so obviously that's quite a big difference. Also, the last time I made this video, I was a lot dumber and a lot less further in my trading journey. Obviously it was a long time ago, so it was a little bit different. But today, I feel like I am able to make a lot better version of that video, a version of that video that will hopefully be able to help more of you guys out, and hopefully more of you guys will be able to understand my trading strategy, because I have been seeing that comment over and over and over and over again on my videos for the past month, and I really did not want to send you guys to that past video. But regardless, I am just yapping right now, and I want to get into my strategy. So we're going to be looking at ES today, or the S&P 500, which is also SPY, as some of you guys know it. Regardless, so we're going to take a look at ES, which is the futures variant of that today. And we are going to, I'm going to show you what I do on a every morning basis and how I would be looking to take a trade for the day. So obviously, this is Friday. This is the most recent day. I have already traded this day, and I already knew everything that has happened in this day. But regardless, I don't want to make an exact recap of the same video that I basically uploaded on Friday, and would rather just talk about a random point and then just go over my full strategy and what I look for in the trade. So, first things first, I want to be looking for highs and lows to be swept. The reason why that is because banks have orders underneath. For example, this hasn't been swept out yet, or I don't think it yet. No. Regardless, this hasn't been swept out yet. So, what do you think is lying below this low here? We got some orders. So when price ends up crossing below this low, obviously these orders end up getting filled in more. The market ended up creating more positions to then reverse and then go back to the upside, which essentially this almost was a liquidity sweep. Because if we take a look at well, this was a move made over a course of a couple of days. I do remember this. This was the Halloween bloodbath. I remember this exactly. But if you do pay attention to this, this is a really great trade. So on Thursday, we have this low that is formed right here, right? We end up having the market ends up consolidating, ends up coming up, ends up filling this imbalance, this is likely a daily imbalance. Then price continue to go lower, but at this point, price was already looking to go higher. We were already filling this order block. I don't think this was ever swept, was it? Equal lows, but regardless, not my point. I'm getting distracted now. We have this low, gets swept by this low. Then what happens? Price proceeds to go higher. Now, would have we taken a trade off this? I am not exactly sure, because we are now looking on this at the 4 hour, and I just want to show you that is literally the first thing I look for. I wait for highs or lows to get swept. And now you guys might be asking me, Dan, you see, let's go somewhere recently so I can make this a better example. You see this, you see that we have a high right here, but the high got swept out right here. What proceeded to happen? It went down. Did he take a trade off that? No, because it's at 4 a.m. But I could have. Regardless, that's not my point. It just works. That's the way the market moves. It moves based off highs getting swept. Obviously, there's liquidity runs. It is not going to be 100% of the time that you're going to be able to catch a trade off a high or a low getting swept. Now, regardless, that is the first step I wait for in my trades. Like the previous day, previous week, London high, London low. But after that high or low gets swept, what do I do past that point? After we see the high or low get swept, after we see that form of liquidity get taken out, I then want to be waiting for price to retrace into some sort of imbalance, some sort of fair value gap, some type of order block. And obviously, this strategy exists all over YouTube. So many people trade within this concept. I believe it's like SMC or whatever. But it works and it's a great strategy. But there are some tips and tricks that I want to show you and how you can be able to find and spot some of these imbalances. So first of all, obviously I do have a whole video on fair value gaps. That video is also old. I will eventually remake that, but not at the moment. So now let's just show some type of realistic example here of a full trade. So I'm just gonna go through Friday's example. Or actually, this is actually a really good example for right now. So we have this January 2nd low here that ends up getting swept out here on Friday. After this low got swept out on Friday, what did we notice price did? And of course, this is on the S&P 500 as well. But price came, swept this low. Where was the first point where we broke structure here on the 1 minute? We got a high. We did not break structure here. Price kept going down lower. We did not break structure here. No break of structure, no break of structure. We end up breaking to structure to the upside with this candle right here for the first time. With this candle right here at 918, we broke structure to the upside at that time. Based off that, then I would have been looking for a move to the upside from this point and then setting your stops below these lows. Obviously now we are on the 1 minute time frame. Let's see if we were able to get some type of entry. Our first entry point that we ended up getting, I think we might have had something earlier here. I just switched over my time frame to the 3 minute, by the way, if you guys didn't know what I did. We ended up having this fair value gap right here, and also we had drawn out this equilibrium. But unfortunately, our daily bias would have been wrong here since price has already been bearish over the last couple days and we've already made this large bearish move. I don't necessarily think I would have taken the trade based off this because I know that after this price wanted to come back down and collect even more orders, which is why we ended up sweeping liquidity. Actually, on this day, I ended up taking a loss regardless, not even to do with any of this. I took a loss on 9 a.m. on Russell. But regardless, if you were to enter off this trade, and honestly, a lot of people would, and based off price retracing into this fair value gap, I mean, you really would have not won this trade. I mean, if you were targeting just this high up here, man, I really couldn't see how your stop loss, how you prevent yourself from getting stopped out here. I think you're going to end up taking this L or eating this L. But regardless, there are other ways to enter trades and format your strategy. Now, let's take a look here. We have another point where we ended up coming down, sweeping even further liquidity. Let's see if we ended up getting an entry here on the 1 minute. And on this trade, actually, we ended up getting a perfect entry on the 1 minute that I see. So we literally came down, swept further liquidity. We even swept further liquidity right here. Ooh. Now, we have an inverse fair value gap right here. Even though it's tiny, it is a 1 minute inverse fair value gap. This ended up, I mean, a lot of that wouldn't have worked. We have another fair value gap right here. So after taking out liquidity, price ended up drawing into this. This would have worked out if you were just going to the high. But at the same time, you also would have been, like, again, Friday, we just had so much bearish pressure. Like, Friday is literally the worst example of this. Like, Like I should be like showing you guys the opposite of example, and it goes both ways. Obviously, you have a I wouldn't even consider that a major high. Let's show a better example. Get rid of this. I know I'm dragging this on a little bit, but I want to make sure you guys are able to understand this. And obviously, bro, this is like pretty confusing. And I want to show you another thing, bro. This is another great example. If you are in the middle of the week and prices at a point like right here, it is 5 a.m. You wake up, prices right here. What do you think the market is going to want to do? Why do you think the market made this move down? We ended up filling this imbalance. So there are these imbalances. They're also known as fair value gaps. In this scenario, we also were filling this inverse fair value gap here. And then we did not tap into that 1 minute or that 4-hour order block up here, or even if you consider this the order block. I mean, I guess you could consider this, but we did not tap into that order block either. But we were in this imbalance. So imbalances are zones where price also wants to draw to, similar to liquidity, similar to a low or high. And in these imbalances, especially if it's an inverse, price is more than likely going to make a move down. But if simply price traces into another imbalance, and obviously 4-hour imbalances have a little bit of more respect, the higher time frame obviously gets more respect than the 1 minute. But on the 4-hour time frame right here, you saw that price retraced into this point. The second price retracing this point instantly went down, took out these levels, these lows, and ended up going even higher. Then we actually had multiple imbalances formed, and let's see how price reacted based off of it. So we had this imbalance right here that actually never ended up. Actually, it might have got respected because at one point price was here, and then one point price came completely out of it. And that's not a significant zone, but a zone big enough where you're able to take a scalp 100%. So that could have worked out actually as a trade that actually ended up getting respected. It looks like it more than not. But regardless, it ended up drawing through because obviously we are in bearish structure right here, and we are continuing this bearish structure. But now that we took out these lows, I can infer that price is going to be moving higher over the next couple days. But regardless, all these imbalances that we have multiple other ones across. And if you look at NQ, you'll see the exact same thing. But we have this 4-hour imbalance. Then we have this 4-hour imbalance. All these imbalances. So when price wants to retrace here, price is going to be filling more orders back down to the downside, facing more bearish pressure. But also price wants to trace here because people have orders here. Regardless, also orders above liquidities, highs, lows, liquidity voids, which is also these imbalances as well. I know it's really tough to make a video fully on strategy, but honestly, that's like the most beginning way I can make my video on strategy at the moment. I do want to come back to this maybe like next Saturday, maybe keep making like educational videos based off the questions that you guys have. But hopefully you guys were able to learn about imbalances or fair value gaps, whatever you guys like to call them, liquidity sweeps, or just taking out highs or lows. Obviously, you take out a high, price wants to go short. If you take out a low, price is going to want to go long, vice versa. But yeah, other than that, I hope you guys are enjoying your weekend. Hopefully, I was able to help some of you guys out with this. This is like the very beginner version of my strategy. I didn't really want to go super in depth. But honestly, it isn't super more, like my strategy isn't more complicated than this. The only thing I haven't really talked about is order blocks or equilibrium in this video, which obviously I use equilibrium a lot of. I did talk about equilibrium, but I didn't really draw it out. It is the difference between the low through the high where price is in a premium. So price comes down here, even though this says 25, this is the 75% mark. Price ends up tapping into the 75% mark, fills more bullish orders. Price then wants to draw back up and then we ended up drawing up. I guarantee this was some type of shorter time frame fair value gap, which we respected, and price moved down. But yeah, regardless, I don't want to make overcomplicated. Obviously, less is more in trading. I do want to make a video about like my myths, bro. I have so many videos to help you guys out with, bro, and I want to make everything free, bro. Never make anything paid for, because we're trying to better the trading community, not harm it. But yeah, other than that, I'll see you boys on the next one.